All right, everyone, I want to introduce you to Bumper, a new DeFi protocol that is here to redefine how you protect your crypto assets. Obviously, market volatility can be a big concern for us crypto holders. Go check out Bumper. It's bumper.fi. Take a step towards smarter crypto asset risk management. Welcome back to the Roundup, folks. Couple days out from Permissionless. Super excited. How you feeling, Santi?
I'm feeling excited. I'm going to Austin. I love Austin. It's been a while since I've been to a crypto conference, actually. And so I'm really excited to meet up with a bunch of folks out there, teams I'm invested in. First and foremost, you, Mike, the rest of the team. It's a great time. We'll see. I'm also really curious. I think, as I said before, I think the mix of people that are going to be permissionless is going to be interesting, just to gauge sentiment, right? You had a tweet yesterday, I think, which was like the timeline, the sentiment on the timeline, and I'm talking about crypto Twitter, seems to be very negative. Everyone's fighting, everyone's bitter, and hallmarks of bear markets. But you talk to builders, just in one-on-one, very different. I just had a great call with someone who closed down a prior project and is building again. And I get so excited when I see that because he's not leaving. He's like, you just got it wrong. It was bad timing, whatever. I'm going to build again. So the one-on-one conversations are really positive now, which don't get appreciated on the timeline. But there's also going to be an interesting mix of people, right? If you look at ECC, that's like pure ETH camp. I feel like there's always techno-optimism in that type of conference. But at Permissionless, you have a whole host of folks, right? You have JP Morgan there. You have industry, crypto, non-crypto people. And I think it just gives you a better flavor. At least that's what I'm going to be looking out for of what people are interested in. What are the narratives? What is the skepticism in the room? What are the things, learnings? And so that's something that I'm really curious. Long-winded answer of how I'm feeling, but I'm feeling excited because I'm going to be out in Austin. How about you? I know you're critically redlining and not sleeping.
yeah, not looking my best these days. Definitely need some more sleep. No, it's always just a crazy time. Like hosting conferences is it's one of the best things we do and one of the worst things we do because there is so much work that like the day that Permissionless ended last year, we started planning Permissionless this year. And I think that people don't see the amount of work that goes in. I mean, for this year's Permissionless, like this is it costs us many millions of dollars to host. And you have to start, you have to think about everything, right? You have to think about you have to print the badges. You have to print so much stuff. You have to do so much stuff. You have to time it all. Mm-hmm. A sponsor wants a new thing at their booth, but that already went into production 2 weeks ago, but they pay there's so many little things across the board. And, there's 40 or 50 different side events already planned. We rented out a dozen or 2 dozen, just Blockworks alone, like bars in Austin. So it's just a lot of stuff that goes into it. We have 65 people at the company now, and there's a lot of people are hands-on with this event. So I'm excited.
Is this like a Taylor Swift economic stimulus for the city kind of situation? I mean, how many people are going to Permissionless?
It is actually. It is. I mean, Austin less so because there's so much that happens in Austin. But when we hosted, actually, fun story, when we hosted Permissionless, the first Permissionless last year in Palm Beach, the mayor of Palm Beach came to us. He actually came to the conference the third day, and he heard that we were moving to Austin the next year. And he said, we're building a new hotel. We want to incorporate you guys into this hotel somehow. I think it was we'll give you upside in the hotel or something like that if you just stay and host this thing in Palm Beach again. And I mean, we couldn't do it because we outgrew the city. We outgrew the size of the city. It was too small of a city for us, but it was crazy. We had local news at the event.
Yeah.
It was nuts. So
how many people are going this year?
We'll have somewhere between I don't know, a couple thousand, probably 35. I bet who comes on site to Permissionless, walks through the booth hall, probably 3,500 of them. How many people come down to Austin? Probably 6,000 or 7,000.
6,000. Yeah. I mean, that's good.
Yeah.
Excellent.
Yeah.
Okay.
So we're excited, man. We're excited. So this week,
Yeah, I am too.
oh, by the way, if
Yeah,
people
what
are
are we
still on the
covering this week?
fence, yeah, this week, if people are still on the fence for permissionless, there's a code YANO50 that marketing gave me. It works for the next 48 hours. So if you're listening to this, you're on the fence, you can sign up for YANO50. I'm assuming it gets you 50% off. So YANO50. This week, here's what I'm thinking. So Rune had this interesting post about kind of moving Maker not to Solana, but on kind of this fork of Solana. So I think we should talk about that.
Yep.
MetaMask introduced the sell feature, like not that interesting, but kind of just funny.
And 9% fees.
9% fees. Yeah, that's the future, baby.
Future
Visa,
finance right
this
there,
was
folks.
cool. Like Visa stablecoin settlement expanding to Solana. We could talk about that. And then there's also like Lido. Lido's obviously been dominating on Ethereum, but kind of struggling on Solana. We could go there. And then there's this fund, Nima Capital, that, kind of their firm website went offline. The account on Twitter got locked, and it looked like they kind of reneged on this Synapse like agreement that they had. So we could talk about that. But you want to start with Maker stuff?
Yeah, let's do it. I know you're super close, so lead the way, sir.
I'm actually less close with Maker now. Did I tell you my Maker story?
Aren't you? Well, I knew you were a delegate, or you were supposed to be a delegate.
So I was a delegate. I am a delegate. I was a delegate. I am a delegate, and I had been getting every week. I'd like get more and more delegated tokens. Basically, I was becoming one of the bigger delegates in Maker. And at one point, I voted against there was this proposal like maybe 4 or 5 months ago where they wanted to pay a bunch of people a ridiculous amount. And I actually have a pretty good insight into like how much to pay employees, I'd say, like how much to pay people, because we employ 65 people and we've hired and a bunch of people we've probably employed I don't know, roughly like 100 people over the last couple of years. Have pretty good insight into fair compensation, I'd say. And Maker was like just exorbitantly overpaying these people, and everyone had voted yes on this, and I took a kind of hard stance and voted no. And it was kind of like, hey, you're supposed to vote yes on this, you're not allowed to vote no. And the next week I woke up, pulled up my Maker portal, all of my delegated tokens were gone. So I voted the wrong way.
Let's dive a little bit more into that, actually. What was the compensation relative to like a senior engineer makes at a Web2 company?
I think they were paying a BD. I'm going to botch these exact numbers and who it was, because it was maybe, I don't know, 4 or 5 or 6 months ago or something. But I think they were paying a BD person, I don't know, like three or 400K base, and then commission on top of that. They were paying engineers like $500,000.
And that's in stable coins like DAI or Maker or a mix of stable coins and tokens.
That's in stables.
That's a lot. That's like for a BD role. Yeah.
Yeah, it's a lot. I mean, BD like salespeople are oftentimes the highest paid people at companies, but
the commission is like 80, 90%.
It's on commission.
Yeah.
Yeah.
Yeah. You eat what you kill. Not, when you get paid 400K, like the incentive to really go out and hunt is not much.
Yeah.
Candidly.
So I don't know. I was very into Maker. I was following Maker super closely. Was like really into everything that was going on. And then this happened, and I just got kind of discouraged, not only by Maker, but like, I don't know, like it made me a little more bearish on just governance, because at the end of the day, like I don't know, it's supposed to be this fair and open system, and you vote against how the power people want you to vote, and I don't know,
you get kicked out. Yeah.
So
yeah, I've experienced that actually. I was a big part of involved in the Wi-Fi proposal to actually mint 3,333 Wi-Fi, which is, there was a hard cap on Wi-Fi of 10,000. There's this whole Bitcoin analogy meme and whatnot. But, all of that was farmed away very quickly. And that was a big fault of the protocol. So I'm a big believer in incentivizing people and giving employees that contribute upside. But I do think that there's a worth in revising in a lot of these DAOs. There is not a lot of really good transparency, on treasury funds. The people that are voting, the turnout's really low. People are not paying attention to stuff to the degree where there's been protocols that have actually rugged because they make a proposal. No one is looking. No one's noticing. And then they just kind of like, distribute funds in a way that I think if you were to ask people if they were aware of that, they'd say most definitely not. And if you were to ask them, they would have voted to approve that. They would say, yeah, most definitely not. And so it's sort of like this weird, and I agree with you. It is crypto in many ways sometimes can be advocating for transparency, advocating for inclusion, and yes, it is open source, but in other ways, it's a contradiction because it can be very clicky and not transparent in many ways. And in sometimes in the things that matter most, right? In getting the incentives right. And I think DAOs have been largely a failure, uh, primarily because people don't recognize that humans don't, like in any democracy, like people just don't really show up and vote. Like people don't really pay much attention. Yes, they have skin in the game, and you would think theoretically that they would be paying more attention, and on the margin they are. But sometimes the token distribution is very skewed, right? And makers struggle with this quite a bit, actually. Like there was very strong contributors that I remember in the maker camp, in the maker forum and Discord, that didn't have much tokens, weren't compensated, but were putting out very interesting proposals. And then you had a lot of the A16Zs that held a large share of the tokens and were not voting, were not delegating. And so it was like very hard to pass proposals. And that was always, I struggle with Maker, and I'm singling out Maker. I think this is also something that happens in other protocols. But since we're talking about
even in I guess we shouldn't say the name, but there's another DAO that you and I are both in. I don't know if you've been checking Telegram and like these messages, but like the DAO is definitely struggling right now.
Yes.
There's like, so I think a lot of folks are struggling.
Definitely.
So here's what happened with Maker. So so Rune launched this basically 5-phase endgame back in May. So phase 1 was kind of the beta launch, right? First phase of endgame would be establishing this new unified brand with its own stablecoin and governance token separate from DAI and Maker. MKR. Phase 2 was the sub-DAO launch. So following the beta launch, they were going to create 6 Maker sub-DAOs, each one with its own governance token. And the sub-DAOs are designed to function independently from Maker, but are tied to the protocol through its mission, as Rune would say. Phase 3, which is where it kind of gets a little wonky, was the governance AI tools, if you remember that. So they want to design tools using AI for governance. And that's the third phase of MakerDAO's endgame. Phase 4, governance, participation, incentive launch. So the launch of, what was it called? Sagittarius Lock Stake Engine, SLE, I think, where you had this engine that was designed to ensure that the token holders of the new governance token would be actively incentivized to participate in governance. And then phase 5 is, this is the important thing because this will tie into the news, is launching a rebranded new chain. It was like capitalize N, capitalize chain, new chain. That would be the final stage of the end game. And the new chain is designed kind of to be the hub of all the tools operating MakerDAO. And that's like this super important, probably the most important phase of phase 5. So this past week, a couple of days ago, Rune made this post titled "Explore a Fork of the Solana Codebase for New Chain," where he says the 5th and final phase of Endgame is the complete reimplementation of the entire Maker protocol built natively on a new standalone blockchain, codenamed New Chain. The 5th phase is a major long-term project. It'll take at least 3 years, if not longer, before it's realized, et cetera, some more things. And then he goes on, the important thing is Solana, obviously. He says Solana is the most promising code base. After having researched all the different options available to act as the foundation for New Chain, I believe that the Solana stack is the most promising code base to explore further. He lists out 3 reasons for that. I can basically summarize them as, first is that there's this Solana is highly optimized for the purpose of operating a singular, highly efficient blockchain. Second is that the Solana ecosystem has proven to be really resilient post FTX. And the third is that there already exists examples of the Solana codebase being forked and adapted to act as an app chain. So I have a lot of thoughts on this, but would love to hear your ideas around good idea, bad idea, don't really know yet. Like, what are your thoughts around this?
Particularly on Maker going to Solana or exploring this fork? and the
I think
level of criticism the room got.
anything related to this news, and maybe if there's any context and
Well,
backstory to Maker that like would be helpful to tee up here too.
the thing that I've been paying most amount of attention is the reaction of Rune just exploring going to another chain. And I think, look, you got a lot of criticism, and I don't think it's. I'm more of the mind that you should be exploring. I think any DeFi founder that is deployed in Ethereum should be exploring constantly. Like you're never in a binary state. You should constantly be exploring other chains, right? There's no benefit in being super loyal to just one particular chain. You might have preferences. I get it. I understand that. Ultimately, I think you care most about providing the most amount of benefit and having an edge versus other protocols. Like Antonio from DYDX, right? He got an inordinate amount of criticism when he did that. I think he was one of the first, and it was a big splash, and he's one of those that I actually respect and have respected more because he is vocal, extremely vocal on a number of things. And I think that's a hallmark of good founders, candidly. Going back to just the general stuff, I've been of the mind that, and I've been vocal about it, which is there's not enough critique within the Ethereum community. There's certainly a lot of critique outside of things in other experiments that are happening outside. And that's a sort of maximum that in my mind just led me away from Bitcoin. This unwillingness to entertain other points of view and other design, choices and whatnot. I think Ethereum is not on that end. I think Ethereum generally is what has made Ethereum great is this idea of experimentation and willingness to adapt. Because you don't have it. It's so early. You don't to assume that we've got it nailed, perfectly designed is unrealistic, right? But I did see some pretty heavy criticism towards Rune from a number of DeFi founders and other folks saying, "Hey, look, this is a betrayal. You owe a lot to Ethereum," and I get it, but still, I think perhaps the broader question is: are we going to see more protocols do that? Compound, people forget, but Compound put out a white paper for, was it 2 years ago, saying that they're going to explore Polkadot parachains. Kind of didn't. I don't know if I don't think it's gone anywhere or haven't heard much.
They didn't like Polkadot, but I do wonder if crypto would be different if they explored Cosmos, for example, instead of Polkadot.
Yeah, right. What is interesting though is I have been noticing a sentiment shift in Solana, particularly more interest, much more optimism, and I think the pendulum, as Howard Marks likes to say, the pendulum swings to extremes, right, of sentiment. But the reality, the economic reality, is that things never gravitate to such extremes. And I think Solana is one prime example where people have totally given it up, right? We're highly, highly critical. Think Solana's dead. Look at all the projects that are leaving. Some projects are coming back. Some projects actually looking at the merits and exploring, hey, look, this is actually pretty interesting. There's some good stuff happening here. So it's good to see that, I take it as a very positive. Towards the end game and all people should refer to the episode of Rune coming on, and he explained this in like an hour and a half. I still don't understand it. It's highly confusing. Maker is one of those protocols that it is hard to fully understand, and I'm not close enough to it to opine on these things, other than the fact that I take it as a positive that he's exploring Solana, and maybe he can explore Cosmos and something else, Aptos, all of them. Is my point of view.
Yeah. All right. I have two questions for you. Why do you think they're not exploring? Why aren't they just building smart contracts on Solana? Do you think? Why do they need their own chain?
That's a good question. I do not know. Maybe they want to own. My immediate reaction is we've talked about this sort of vertical integration. If you can build your own L1, why not? You have more design choice. You own if you can do that, then it's worth exploring perhaps. Now, the question is always, how do you bootstrap a validator set? How do you, it's a bit of a go-to-market, right? Like building your own. We also talk about building your own L2, right? There's an explosion of L2s. Why would you do that? Well, yeah, you get some benefit of controlling the supply and the sequencer maybe, and there's some economic upside. Certainly a lot of economic upside when you do it right. but it's a challenge, right? To bootstrap it, right? To get a validator set, to recruit, harness economic security, um, or if you're a proof of work protocol, to say even harder. But yeah, I don't know. I mean, I do not know the
Yeah.
full
It makes
story.
me think. So Rune is so focused on governance. If you read his endgame a couple times, it's like very, very always brings up governance. And it does make me think that because it's a pain in the ass to build your own L1, right? It's like you don't do it if you don't need to do it. And it makes me think that I think governance is probably at play here, right? The best way to do governance in DeFi right now is coin weighted voting. And that's a shit way to do governance. But if you actually look at L1s, they have a different way to do governance. You can just fork the chain, even if
Yeah,
you have
yeah. I
zero
mean, you can
stake.
always detract. It's like you
Yeah,
emigrate, right? If you don't like your country, you can go to somewhere else.
yeah,
But you have to go build that island, which is a challenge. And yeah, I don't think, I mean, you could have, I mean, the thing that I don't understand, yeah, he's so focused on governance, but what can't you have if you're built on top of Solana? You can build a layer of governance, right, at the app layer. I
yeah.
just,
But it'd be coin. Yeah, it'd be very like it'd just be the same like coin weighted voting. You could probably implement a different schema,
so
but
maybe he doesn't like the validators like group, and he just doesn't think it's sufficiently like,
I don't know. I
uh,
really don't know. I'm not
I don't
sure.
get it. I'm not
Yeah,
smart
but
enough.
I mean, it sounds like there are other folks who've done this, but it's cool to see this new iteration of like this is an SVM app chain, right?
Hmm.
TBD on if it gets passed or not. I don't know if you listen.
Yeah.
So Mike, my
Yeah.
co-founder, yeah, went on
I,
Bankless and had this really good episode. I hate to, promote Bankless on a Blockworks pod here, but I got to give him credit. It was a
it's
really
all
good
love, man.
episode. Yeah,
Uh,
and he basically talked about how like the lines between different blockchains are blurring in real time, right? And I think one thing that you start to see at the depths of a bear market is like ideologies about where you should build, like that all gets wiped away because you know what
yeah.
matters? Getting users, keeping your costs low, and scaling.
Yeah.
And
Look, it's
yeah,
security.
and
If you
security.
don't
Yeah, that's
value
true.
security, then don't even consider a blockchain. This is just a database. Just stick to Web 2. Um, and so go to the most secure chain. If you don't think there's a secure chain and you think you can build a more secure chain, okay, go for it. I do think that security is pretty, like, there's this idea of Lindy effect. The thing, you can never be fully certain that things are 100% secure. You just have the longer something exists, the more certainty you have that it's secure. So Bitcoin is very secure, for that matter. And you can look at hash power. Ethereum is very battle tested. So are Solana, you could argue, but less so than Ethereum. So marginally more risk deploying there. But you could look at the Nakamoto coefficient. You could look at the validator set, how distributed, decentralized, two different concepts, right? So there's a number of things that you can kind of hone in on the security of stuff, which I believe is the most important thing. But I'm just changing in mind. Like, governance is one of those things that go back to the opening statement here of the podcast. Is the more and more I see stuff is try to, like, trust minimization of governance should be the goal here. Like, if you can get rid of governance, like, I'm still not convinced. It's like chopping, right? You simplify
Yeah,
stuff, get rid of everything that, if you can, you know, I think this is what makes like L1's beautiful, because there's no like actual governance. As you say, you just detract and go somewhere else. There's no like actual voting of how the blocks can be ordered. It would be total chaos.
100%. So,
Yeah.
do you think this should happen or no?
Like, let me ask you a question. This is very lawyer of me. Like, you ask you a question in my response. Does that mean that they're going to leave Ethereum? Like, there's going to be a maker in Ethereum? No, right? It's still going to, like, the implementation is still going to be there. Like, how do you like rip?
I actually don't know. I actually don't know that. I don't know.
I don't know. So I can't answer. If that's the case, you're trying to do that, feels like a huge overhaul. If it's more of like a cross chain deployment,
Yeah.
feels like I don't see much risk or downside. I should say risk.
Mm.
I should say I see limited downside, more upside, right? You get more users, you get more, and we've seen other protocols deploy in other chains. But I don't know whether if the center of gravity is moving to Solana, what does that mean for Ethereum? Does that mean that it just no longer exists? Like no, right? Because there's so
No.
many users in Ethereum that want to use Maker. Like if you're vault or not, like you're not gonna. I'm just really struggling to understand, and I don't know because I haven't looked closely enough. What is it at the end of the day? As you said, what does that mean for someone that has a vault open on Maker? What is he going to have to do? If nothing really changes
Yeah.
from that front, then I don't really care. What happens on the back end.
Yeah. Yeah. So it's funny. You're starting to see this app chain thesis really play out, but it's not happening on Cosmos, right? And that's like, I don't know. You got to feel for the
Yeah.
Cosmos guys. Like that was the app chain thesis was the Cosmos thesis, but it's happening, right? It's really happening, but it's
Listen,
not happening on Cosmos.
we had Jack and Zaki here. One of the last questions I asked him is, how do you feel about BD? Now, you're not supposed to pay $400K for your BD, folks, but how do you feel about BD? Because Cosmos, I've always felt Tendermint as a consensus engine for Cosmos is pretty battle tested. But I think that they've all been on one of those protocols that super smart guys. They've had some drama with founders and whatnot, and IBC was delayed and whatnot. Nonetheless, I think the tech is pretty cool. But I don't think they're killers. I don't think they're BD. I don't think they get their name out there, and you need to have that. I appreciate we're early, but the best tech doesn't always win. And I know there's really vocal folks out there. Some of the guys that work in Blockworks we had on, but you just don't compete, right? It's a number of things, right? And it's again, we might be revisiting and come back 6 months saying, wow, we're so wrong. And they were at the cusp of this huge growth, but it doesn't feel like it, right? I may remind listeners, Libra at Facebook forked Cosmos, like Tendermint, use Tendermint, or were you going to use it? Binance Smart Chain uses Tendermint.
Are you sure about
so
that?
Many other
Is that true?
Yeah. They were going to use Tendermint. Absolutely.
I didn't know that.
And then they started developing what ended up morphing into Aptos and a number of things, right?
Yeah.
But initially, it was a forked version of Tendermint. I don't know. I think it's. I don't want to call it too early, but they need a BD overhaul. They need to get more out there, and maybe part of the problem is the incentives, right? They don't have enough tokens, like as an organization, to dole out or whatnot, to track teams when you're competing against Aptos or some of the other new L1s or even L2s. Like they have way more muscle, right? To convince people, games, NFT projects, and whatnot, right?
Yeah.
And so it matters.
All right, everyone, I want to introduce you to Bumper, a new DeFi protocol that is here to redefine how you protect your crypto assets. Obviously, market volatility can be a big concern for us crypto holders. Bumper alleviates this by allowing you, the user, to lock your tokens into the protocol and set a price. No matter how much the market fluctuates, your investment in your token won't fall below the predetermined value. When you compare this to traditional options platforms, Bumper offers a non-custodial and actually cheaper on average alternative that protects the value of your crypto from market price drops. If you are looking to earn a yield on your crypto, Bumper has you covered. By depositing USDC into the Bumper protocol, you can earn a return which is derived from the premiums paid by protection buyers. Early adopters and Empire listeners have a chance to claim a part of the $250,000 early adopter bump rewards. Go check out Bumper. It's bumper.fi. Take a step towards smarter crypto asset risk management. Hey everyone, we'll get back to Empire in just a minute, but before we do that, I want to let you know that we have Permissionless coming up. Permissionless is a big conference that Blockworks and Bankless put on together. It is the biggest, the best DeFi conference in crypto. This year, it is in Austin, Texas, September 11th through 13th. If you've been in crypto for a while, you know that bear market conferences are the best kind of conferences. We have a phenomenal lineup of speakers. A lot of the guests that you hear on Empire are both going to be speaking there. You will have the opportunity to meet them there. And a lot of the topics that we cover on Empire, ZK Tech, roll-ups, account abstraction, MEV, app chain thesis, a lot of that kind of stuff, that will all be discussed at Permissionless this year. So because you are a listener of Empire, you get a special discount. That's right. Santi and I negotiated with our marketing team You get 30% off if you go to blockworks.com/permissionless. Empire 30 is going to get you 30% off your ticket. Today, when I'm recording this, that's about $300 off your ticket. So type in Empire 30 when buying your permissionless ticket. You get about $300 off. Click the link at the bottom of this episode. It's in the show notes. Do it quickly because prices go up all the time. And if you are going to permissionless, hit me up. Let me know. Shoot me a DM on Twitter. I would love to meet up with you there. Should we stick with Solana? Talk about Visa.
Sure. Yeah. I think that was a great announcement. That was one that really caught my eye.
Yeah. So Kai Sheffield, who is just an awesome person, but also head of crypto at Visa, tweeted out this big announcement on Tuesday. I'm just going to read it. We are excited to announce that Visa has expanded our stablecoin settlement capabilities to merchant acquirers, launching pilots with WorldPay, Nuve. The important part here, utilizing the Solana blockchain. And he goes on to explain it. When a consumer uses a Visa card to make a purchase at a merchant, they experience the convenience of instant payment authorizations. What they don't see is that the value for their purchase needs to move between their bank, the issuer, and the merchant bank, the acquirer. Visa's treasury and settlement systems enable the clearing, settlement, and movement of billions of dollars a day, making sure the preferred currency is received in the correct amount from the issuer and sent to the acquirer. In 2021, Visa began testing how we could use USDC inside our treasury operations, leading to a live pilot where we now accept settlement payments for Crypto.com's credit card in Australia over the Ethereum blockchain to a Visa managed Circle accounts. Goes on to kind of explain that pilot. And now he gets into Visa can now settle these payments to WorldPay and USDC, enabling WorldPay to more flexibly manage their own treasury infrastructure and route the USDC directly to their merchants with less worry about wire cutoff times and bank holidays. Super cool. It's still early days, but Visa has already settled millions of dollars of USDC over both the Ethereum and Solana blockchains between our clients. We're committed, et cetera, et cetera, et cetera. So really cool announcement from Visa. Very excited about this and very interesting that they chose. There's like two stories here, right? There's awesome to see Visa, one of the largest payment networks in the world.
The largest.
Yeah. Yeah. And like just pushing forward with like on-chain stuff. And then also very interesting that they chose Solana.
Absolutely. I mean, I'll just comment like, there is so many parallels when Visa started. Like there were so many skeptics of how you could use not traveler checks, not cash, and use this thing, a plastic thing could be used to like pay for stuff. And you didn't have to carry these traveler checks when you travel and whatnot. Like that's the thing in the past. And Visa really pioneered that. There's a great ad on the newspaper, like circa 60s or whatever, black and white stuff that said like this thing, Visa, like revolutionary. And so many people were critical. And you see the same, level of skepticism around stablecoins. But we were talking about this, I think, in a prior episode of the Coinbase one, right? The Coinbase Ventures kind of ideas, right? Which is what guys. So right, like the amount of fees that happen behind the scenes to enable you to swipe your card anywhere in the world that accepts Visa and is part of the Visa network is pretty large. There's an interchange fee. There's settlement times that are harder. Merchants don't get money in time. We're talking about the instant settlement of these things is huge. It benefits Visa because they can earn some fees elsewhere, I believe. Actually, we'll get to that in a second. But it certainly benefits merchants, I think, because they get instant settlement and they can have those funds, working capital. It benefits the consumer, I think, as well. Visa probably benefits because it's like there's no like fraud, there's no reversal of these transactions. They probably cut a whole host of operations on the back end that are people that are checking this stuff to enable, the accountants that are making sure that everything is balancing out, right? That doesn't happen when you have like a smart contract that verifies movement of funds in an instant manner, and so it's pretty awesome to see. This is one of those where a lot of people that are skeptical of show me. It's really just a bunch of like, people that are speculating, gambling, and or like crypto punks that are really interested in this technology. I'm like, no. From my vantage point, banks are really excited and interested in deploying this technology for real. Visa as well. Yeah. Like they because there's a meaningful cost save on the back end, and that is enough to like get people really interested in this. You know, you've seen the likes of Santander and a few other banks like explore, you know, bond issuance and settlement, and just the record keeping itself on an open distributed ledger. Like it's so obvious, right? That this needs to happen like that. You can measure risk easier. You can understand like the composition of the ownership of these instruments, and the trading of these instruments can happen faster. There's no settlement T+3 or 2 or 30 or whatever. And that has a whole cost saving benefit to that. So look, it is very impressive that Visa as the largest is exploring this. And that tells you everything you need to know about where stablecoins are going. I mean, it's
Yeah.
just unequivocally going to be how e-commerce is going to be run. Full stop.
May of 2020. You remember Paul Tudor Jones called Bitcoin the fastest horse in the race? And what that did
Yes.
is it unlocked institutional capital. And the reason it unlocked institutional capital is not because, you know, obviously some people, you know, said Paul Tudor Jones is doing it, we should do it too. That's one of the reasons. But the real reason is it took away the career risk for portfolio managers to allocate to Bitcoin. Previously, if they
Right.
thought Bitcoin was a good idea to allocate to, they wouldn't bring it up because of the career risk. But now you can't get fired for allocating to Bitcoin because folks like Paul Tudor Jones do it. This moment is huge for the stable coins. I think it's a similar type of moment for stable coins. It is a massive validation, right? Not every merchant wants to accept USDC. And let's say you're the head of infrastructure for a huge merchant and you
Yeah.
say USDC. Before this, I mean that's career risk in the same way, but every merchant wants instant settlement. And now that
Oh
Visa
yeah.
has brought this up, right? Lower cost, lower risk, cross-border US dollar delivery to merchants. This is a huge
Huge,
unlock across
huge,
the
huge.
industry, you know, the
I mean,
ecosystem.
what's most exciting here, Jason, is on the investing standpoint, you have to go to committee to convince your PM to allocate to this asset class. When Visa rolls this out as a feature and gives you all the benefits, it's a click of a button. Like it's a turning on kind of feature, or it might even just be enabled. And this is what I tell people. You know, a lot of people ask me, "Hey, how do you see this technology evolving?" I'm like, "Look, most people don't really care or know how technology works in the back end. Not the internet. Don't even go further. They don't even can't even draw a bike.
Yeah.
You don't even know how an airplane. They don't care about these things. The apps that you have on your phone are probably not going to change. You know, and most people might even not even know they're going to be using crypto rails, but they're going to get a loan faster. Their rate's going to be lower. They're going to be approved much faster. They won't have to fill forms over and over again. All this jazz, right? Where you're a merchant, you know, the reason why most people don't accept when you go a merchant, they decline your American Express is because American Express charges them more fees. And so I think it's one of those things where people just might go in and more you could see American Express get into the game, right? Very quickly. Visa go serious here because they're going to be, you know, they're going to feel at a disadvantage, and so MasterCard and so on and so forth. And that really, you know, goes to stablecoin. The percentage of stablecoins, not only like the sheer aggregate of stablecoin transactions, like just goes up orders of magnitude, but also the percentage that is on payments encompasses a much larger share, which is de minimis right now.
Yeah.
Right. And so that's really, really exciting. You know, I think if you were to survey thousands of businesses, you would tell them, hey, what if I told you that you could get your money not T plus something that is heavily negotiated if you're a small business versus medium versus large, right? And it's really the small to medium that get crushed. They get their money not in 3 days, they get their money in 20 days. If you compress that, like it is probably one of the biggest pain points of merchants is how quickly they get the money.
Yeah.
And so even particularly in e-commerce, the number of transactions that get rejected, like false positives, is fairly high, right? And it's billions of dollars that get lost, and subscriptions that don't get renewed because they're swiping credit cards that don't work anymore. That doesn't happen with stablecoins, and that's huge. So, but I do think that it takes, you know, payments is one of been those categories that people get really excited when you first learn about crypto, right? But it doesn't happen because people don't like to spend their Bitcoin. It's a volatile asset, but a stablecoin is not. And I think it's due for a huge, huge renaissance here of payments as the largest category in crypto in the immediate term.
Yeah. Yeah. It's funny. So I found a shirt from the Bitcoin event
Here we go.
Bitcoin Conference 2013, and the subtitle of the conference was uh,
Payments as a
revolutionizing
service.
the payments industry or something. I'll find it. I'll send it to you, or I'll
Yeah.
post it on Twitter or something.
Yeah.
Um,
Yeah.
but
I think it's
it
one
was,
of those
it
things
was all
where,
payments. Yeah.
think about the second order effects of this, right? You start with payments, and then people could become conditioned to then investing, and then gaming.
Right.
But when you're transacting so easily in digital currency, like it just becomes so habitual. Like every day, like you're just stable. You're used to seeing USDC or whatever flavor Paxos, whatever flavor of coin you have, and it's going to be a thing. And people get very quickly will adapt to this new normal. And at that point, I think it solves so many things, so many issues, right? Where people have been so critical of this industry. We had Rebecca and the regulatory pod talk about, hey, the biggest problem right now is most people just think that they don't take this industry seriously because they don't see a really good use case. It's super small. It doesn't compute. It's all, 24/7, 365 casino. But the reality is no. And this is, I think, going to be the thing that people wake up to and say, I get it. Because you feel it and it's real. And as a catalyst, I think, and as a narrative, I think it would be the most important thing. And I'm so glad Guy's probably been one of those industry guys that has been around forever, right? And he's been doing God's work at Visa. There's been so much turnover in cycles of folks at different organizations that, when crypto's popular, they hire a team, and then they come out with a bunch of announcements that don't amount to much. But Guy's been at it for such a long time, and I think it's super, super impressive that on an organization as big and serious as Visa is truly doing good work and getting serious about utilizing this technology. Perhaps the second organization that I can think of just to round up this thing is LVMH as a luxury conglomerate, appreciating the benefits that this whole new generation and category like NFTs enabled.
Yeah.
So two different big narratives, and I mentioned this because we always talk about narratives, right? And I think these two things are the biggest things that I'm seeing right now.
Yeah. Let me zoom out from this a little bit and just talk about Solana for a second. So you've got Visa building on Solana. You've got Rune and Maker thinking about building, their kind of app chain on the SVM or fork of the SVM. I guess that's what you'd call it. What are your kind of updated thoughts around Solana here, from like an allocation perspective?
Well, from an allocation perspective, like I haven't deployed new dollars, I guess. But that's not to say. But I am curious and actively looking to invest in projects that are building in Solana. I mean, I have a portfolio that is built on top of Solana. But yeah, I mean, I've been close with the team at Solana. We've had Ben on, we've had Toli, and so they're super active on Twitter too, and so I have good conversations. And I could just tell that I like to see that they're active and actually like they are. I respect them so much because I think they're the number one team out there that really embraces criticism and uses that to their advantage. And the God, they've really gone through fire, right? And it's been hardened. And it was good to see Vitalik and some other folks in the Ethereum camp say, hey, look, when FTX kind of went down, they said, hey, this is kind of the DAO hack moment of this community, and I think they're going to hopefully come out stronger. And I think you're seeing that now. Are they out of the woodwork? I don't think any community really is, right? A bear market is always that's kind of conviction, but I'm increasingly super positive on it, and I think I really like how they've taken criticism and implemented upgrades, like on the fee model, dynamic fee model, for instance. Makes total sense. And I always point people to that and saying, tell me how that from being highly criticized to implementation and deployment, like that whole kind of loop was really nice to see. And I think it really embodies the kind of thing that I like to see in teams that are building. So to cut it short, my allocation, I guess, has gone up on a percentage basis because Solana has rallied, right? It went down to 8, and then it's now sitting at what? Forget now.
20-ish, 19 maybe.
20-ish, yeah, 20-ish, low 20s. So that has increased to percentage, but I have deployed new dollars. But anyone listening out there, thinking of building on Solana, or not just Solana, but if that's your home, then reach out because I'd love to
Santi,
meet
you know
you.
what always happens here? You say reach out. You know what
But
people do? They reach out to me and say, "Can you
oh,
connect me with
really?
Santi?"
Lovely. Well, then you can also invest. I don't know. Isn't that good?
Yeah, I
Yano
guess
is
I do.
my
Hey, then I get your deal flow.
Yano.
Yeah.
Yeah. I mean, how's that bad? All of a sudden,
No, I'm
you
down.
know
I'm
what,
down.
folks? Yeah. Yeah.
I'll
Yeah.
take
Yeah.
it.
Have you? What's your kind of allocation stance on it? Well, the meme would be like, where are you finding any money, man? Like, like there's nothing. No one has money to deploy, man. What are you talking about?
Where's the
Like,
yeah.
where are you finding these things under the couch, on the mattress? Like, what? Oh, your grandma like all of a sudden gave you some like spare change.
Yeah, right.
Because I heard a terrible stat on venture just funds, like the deployment in crypto is not only crypto, just as a whole. Like, my
Yeah.
goodness, I mean that's a whole topic in and of itself, but it is tough out there. A lot of founders are really struggling to get funding, and it's always like this. But it's real now, when interest rates are going to persist and stick at 5% for a long time,
Yeah.
and yeah, it's tough, and LPs are not getting distributions from old dated vintage funds. Like,
Yeah.
it's tough. Even the best teams, even the best projects, not just in Solana, are really struggling to put two and two and raise small rounds. I'm not talking even 5 million. I'm talking 2 million rounds now, and that is 3 million rounds. It's tough, even for the
Yeah.
best of founders, even for the best of teams. So there's a very I think there's I don't know. There's a very cautious outlook, and really people are just hunkering down and saying, look, I don't know how things are going to shape out. There's an election, there's so much uncertainty, and not a lot of deployment happening.
Yeah. So all
But
right,
I
so let
am.
me ask you. Yeah, I'm too. I'm too. Let me ask you
This
about
is a shameful plug.
yeah. Let me ask you about Nima Capital. So it's less
Oh
about
yeah.
Nima here. What I'm wondering is more just about like, well, let me share the story. So Nima Capital is this single family office with a bunch of private and
Mhm.
public equity investing platforms. They have a mandate to invest across a bunch of different things. We've actually known them for many, many, many years. Blockworks used to fun story. We used to host family office dinners in New York. That's like an unsung or untold story of Blockworks. Is one of the first real way that we figured out what sponsorships were, where we had this big family office network that we would build by like cold emailing and cold calling people, and then we'd bring the family offices there, and then companies like a BitGo or do you remember Harbor? They did like tokenizing real estate. They would spend like 25K to like sponsor the dinner. Anyways, Nima Capital would come to those dinners. So they got a grant from Syn. They got a Syn grant, SYN Synapse from the DAO via the foundation to basically like build this new liquidity model. I think it was to like increase quote efficiency by 20, 30, 40, 50%. Um, uh, they received this grant in return for locking $40 million of liquidity of Syn. So they were this long-term capital partner of the DAO. But what happened, I'm just pulling up my notes here, is they did not keep it locked. They allegedly sold more than 9 million Synapse tokens. And Synapse Labs just posted on Twitter. They acknowledged the sale and the liquidity removal in a post, saying that they're just investigating unusual activity on their wallets. They didn't disclose the liquidity provider, but I think it's become pretty
What
clear.
does that mean?
Also,
Things were done from a wallet I control and no
from
longer
yeah,
control, or something.
exactly.
It's like,
So
okay, guys, we can all see
okay,
what's going on chain. You send it to an exchange, or
we see.
testing liquidity.
We see. So anyway, since then, Nima Capital's website has gone offline, and they did not immediately respond to a request for comment.
For comment.
And their account on X is locked. So, um,
Yikes.
I would guess one of two things here, not to spread FUD, but like I would assume. So I've heard going around that there's if a fund is so maybe you can explain this to me. If a fund has been around for 5 years, you have to go through all these. You have to like file all these things, maybe with the SEC or something. And a lot of funds, they'll like the funds who were started in 2017, 2018, they're now at their 5-year mark. And when they come to investigate you or just like look into your, I truly don't understand how this works, so you can educate me.
Like a
But like,
registered investment advisor.
yeah, something, once you hit a
I
certain
don't
AUM
know
and
if
it's
it's a
been
time
5
of
years.
I think it's more of an AUM thing, less so of a like vintage. But I may be wrong. Yeah, but it's a pretty big overhaul to convert to a registered investment advisor. And what you're saying is that they somehow wanted to avoid
I don't
that
know, like
process and sort of
either they're
liquidating.
getting either they're getting looked at, or they just ran out, or they messed up a bunch of trades and they need
Wait a minute.
liquidity.
You always get looked at. Not just crypto funds, hedge funds.
Yeah, yeah.
They do periodic inspections. If you're managing outside people, outside money, especially, the bar's higher, and they're going to be
Oh,
inspecting your books,
this
and
was
you have
the
to
other
make.
thing, Santi. The Wall Street Journal reported last month that a condo linked to Nima Capital was sold for 80 million bucks. So actually, I don't think this is probably not like some investigation. It's probably just they have a huge liquidity crunch. But
Maybe. I mean, probably. I don't know. I don't know enough or
yeah,
anything actually, but it does
yeah.
beg the question of how are these deals even being structured? I mean, what a handshake lockup? Well, you could like there's a thing called the smart contract that it really enforces this without trust.
Yeah.
Like this is the thing also with the curve sales, right? I mean, were those actually in smart contract or were they just like verbal agreements? Like, we this is what I struggle with this industry, man. Like, there are ways to deploy things that minimize trust to avoid situations where trust is breached. You can do that in a cost-effective manner, and by the way, it is. So you can deploy a smart contract. It's a fairly easy standard. Why not do it? What is the benefit of not doing that at this point? And time and time again, we just learned that this happens, right? So, anyways, just a healthy reminder, right? If you're doing some sort of transaction that involves investing and lockup, just do it. Like, it's
Yeah.
on chain. Like, there's no ambiguity. There's no risk. Like, what am I missing?
What is
You
the
just go.
what is the kickback for basically breaking lockup rules? Is it basically just reputation risk?
I mean, like, I don't know, like the contract. You'd have to look at the contract,
Yeah.
but it's a breach of contract. I'm not an expert in tort law, but it's a breach of contract, and you can argue about a whole bunch of things. Like, okay, like in a worst case, you can argue damages, right? I mean, like if they all of a sudden like hold 2, 3, 5% of the log and they sell, like the proto would probably go back and say, hey, wait a minute, like you sold, that had a material impact on the price. Not only that, but the signaling, right? Because people can track your wallets, like what's going on, like all kinds of things, right? There was a good post from, believe it was Ari Paul a while back, that talked about these things where like the supplies log, but there's like OTC desks that are allowing you to like trade that. Like there's a whole. He really doesn't expose some of the inner dealings of these transactions, and I'll surface it. But Ari Paul does a great job. People should go look at his tweet. He does a way better job of like really just exposing. Like, hey, sometimes like you got to look at this stuff, and a lot of it was going on in FTX. So like Alameda and FTX, and like
Yeah.
they would like. So, anyways, like it happens, right? And again, it's one of those things where the industry advocates transparency from first, like blockchains are transparent. This industry is open source, and then so many other things. Like I'm not making broad characterization because I think this happens everywhere, right? Like to not even go into finance and how obscure these things are, and like global financial crisis. I don't even go there. But we're talking about crypto, and we always want to be super critical about crypto because we can do better, and we could self-police, and we could like push people to do the right thing. And it's one of those where you could just structure things with a smart contract. That's why you gotta love smart contracts. You just, that's it. People can, whatever you're doing, you can look at what's happening, not just sending your tokens to a market maker and pray to God that they're not sending it to an exchange just to cleanse wallets. You know what I mean? Like, come on, like we know at this point, if you haven't learned the lesson, it's like, fool me once, shame on you. Fool me twice, shame. What is it? Shame on me. Yeah, because So, anyways, it will be interesting to see what happens. More so, I really love to understand what was the intuition from the SYN team? Who voted on that proposal? Who decided on that? How was that structured? These are all kind of open questions that I have.
Yeah.
Anything else that
I
you like, you would say
No,
on that?
I think the last thing from this week was now that there's excitement around this Bitcoin ETF, the spot Ether
Oh
ETF
yeah,
is kind
that
of
was
kicking
Arc.
off, right? There's this bid with I think it was ARK Invest in 21 shares.
Yeah,
So
yeah,
and 21 shares I think used to be Amun, Hani's thing. Hani's awesome.
hmm,
And yeah, and Kathy Wood, ARK
yeah,
Invest.
yeah.
There've obviously been futures ETH
Right.
ETF filings. I'm not sure if there have been spot ETF filings before, where they hold Ether directly, but it's cool to see.
Definitely. So, what do you think? How does this play out? Bitcoin ETF gets approved first. Imagine if an
Imagine an ETH
imagine an
ETF.
ETF gets approved
Dante,
over
I've never
Bitcoin.
seen you
Wow.
smile so widely.
I was just meeting on the timeline and be like, just see all the laser eyes, be like, whoa, what's going on? Like what
What
happens to
is
the laser eyes?
happening?
What happens to the remaining laser eyes? And I know I'll remind folks that Jason's claim to fame is that he convinced Tom Brady, or he gave Tom Brady his laser eyes, and he sent him a picture on Twitter, and allegedly he changed his profile picture to
What do you
laser
mean
eyes.
allegedly? He did change it. I tweeted at him and
No,
said, you won't change
I,
it.
I, I'm not objecting the fact that he did change his profile. I think we all saw it.
Do you want to
Allegedly,
know
it was
do you want
you.
to know the real story behind that of how that
Oh,
happened?
you. I think you've said the real story before, but you somehow failed to disclose certain things. So let's hear it.
It got changed. So I tweeted it, like I think he tweeted like exploring Bitcoin or something, because he had this deal with FTX and he was starting to
Uh,
tweet about crypto more. And so I was like, you won't. I just tweeted at him like, you won't change your eyes to laser eyes or something. This was like
you
height of the
challenged
market.
them.
Yeah,
Uh,
2021. I challenged him and actually made the photo for him. So I made his laser eyes for him,
and you
and he
tweeted
changed.
that
And I tweeted it and was like, "You
openly,
won't
and not
change your
DM them.
thing to this." Yeah,
Oh.
and he changed it, and I was losing my mind. I'm a Boston
Uh,
sports fan, Patriots fan,
yeah.
grew up
Are you a
loving Tom
Pages
Brady.
fan? God. Folks, I'm leaving Empire.
Red Sox, Celtics, Patriots,
Clearly,
losing my
I didn't
mind.
do my proper deal. As someone who went to school in Boston, God, Jason, how did I not
I
know this?
Where'd you go to school?
BU.
BU. I like BU.
Go Terry.
Anyways, I get a text from a friend a couple. So tell my whole family, Tom Brady. I'm getting text. Anyways, a couple days later, I get this text from a college friend. I haven't talked to her in years, and she's also a Boston sports fan. Turns out she was running the she was
Social.
working. She was working at, like, I don't know, WME at the time or something. I forget, or
Uh,
Endeavor, and she was running the social for Tom Brady at the time. And
and so she knew you, and
she
okay.
hooked it up.
So,
She hooked
so,
it up.
so it was confirmed. All right. Folks, we'll give Jason credit here. Not
Yeah.
allegedly. No, it's as close as we get to the truth
Yeah.
here. So,
She
hey,
hooked it up.
good stuff,
So,
man.
anyways, there's your social alpha. All right, man. I'll see you next week, huh?
Yeah, yeah. Hopefully our line's on progress, but yeah, it should be smooth sailing and really excited to go out there.
Actually, it's like
Uh,
50-50. Make it. You see United Central Database shut down earlier this week, and they halted all flights.
oh yeah, yeah, yeah. And there was also
Yeah.
an issue in the UK. And anyways, I buffered in a few days, so I'll be out there. If you are, come out. I'm gonna be speaking there about DeFi,
Who
long
are you
live
speaking with?
DeFi. Kyle and a few other folks. I think framework
Chow?
guys and
Are you on that panel?
Chow. Yeah, about just DeFi in general. Which actually, before we go, I just need to tell folks, MetaMask, the 9% really ticked me off. Really, really ticked me off, because that's not something we're working towards. I know the convenience, but charging folks 9%,
We
And
forgot
I'm being
we forgot
unfair.
to share this. So MetaMask launched a sell feature.
Yes, yes.
Where you can sell not into USDC, but you can sell directly into PayPal or your bank
And
account.
apparently it's almost immediate, right? Like you sell
Yeah.
a token and they'll send you your funds to your PayPal account, whatever. But they charge you 9%, which
Is that true? They charge 9%. Did you test it? Because I don't know if that's a rumor.
I didn't test
or
it. I just saw someone. I mean, I saw this guy tweet about it. If it's true or not, I don't know. Maybe I should be checking. But you know, it was. I had a very visceral reaction to that 9%. Look, I get it. Is it all MetaMask's fault? No, because they have to jump through hoops, and it's a big part of the problem, right? That you're going through these traditional rails and meshing both crypto and traditional rails has a cost. Coinbase charges a lot of fees too. There's a cost associated. But boy, 9%, it's not how we're going to scale this industry. It just is not. And there needs to be a better solution. So after that tweet, a bunch of teams, Beam, a few others like Reach, or, you know, I'm being introduced to a few teams that are trying to solve this kind of pain point, right? This bottleneck where crypto meets traditional rails. But hopefully you can figure that out, right? So, yeah.
Cool, man. Good pod.
All right.
I'll see you in
Great
person.
pod. Yeah, we'll see you, sir. Great chatting as always. Thanks everyone for listening. And we'll be next pod. If you're not going to permissionless, things are going to be at some point being made available. And right, the panels, the videos on YouTube.
Don't tell people that. I want people to buy a ticket.
No. I'm just saying.
They will be.
Like,
they will be available. I just want people to buy.
If not, I'll take my camera. Yeah, and then I'll just like
secretly filming in the back, like pumping out free content.
Those pirated films, right? They would come out, and you'd have a guy like with his I'll be doing that.
Dude in the movie theater with the camera.
I'm gonna be that dude. Yeah. No, but we'll be reporting stuff. We're gonna come out with some good content, discovering what's going on there, and so yeah, stay tuned for that.
Cool. Cheers.